Check.
And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the second best day of the week. And if you live in Houston, it is actually chilly outside today. So, but don't get too used to it. It gets warm again this weekend. But this morning it was like almost had to wear a sweater to work. So, but not today. Anyway, so it's great right now. Markets are doing fine. It's all good, right? I mean, that seems to be the case, but there's certainly always risk on the horizon. And, one of those big risks has been the conversation about tariffs. And so this morning, Michael Leibowitz and I are going to discuss a little bit more about tariffs. What does that really mean for markets? Is it inflationary, as everybody kind of continues to suggest that they are? It's like, oh my gosh, we do tariffs, we have this massive surge of inflation. And this has really been a lot of the narrative from the mainstream media is that, President Trump's plan to induce tariffs is going to create massive inflation for the economy. Well, we'll get into the data, right? We'll go back, look at history a little bit, look at the data, and we'll discuss that a bit more this morning. Also, one of the other sides of this is that interest rates continue to kind of hang in here about where inflation is, which is, kind of what you would expect. Interest rates and inflation have a long history together. But the question now goes forward is, what about next year? Are we going to see, lower rates of inflation next year, or is inflation going to go higher? And is that going to be induced by things like tariffs? One of the interesting comments that comes out around this is that Trump's plans is going to increase the deficit by $4.5 trillion, depending on the reports you get. I've seen as high as $7 trillion of the deficit. The problem with a lot of these analysis is they look at things in isolation, like tariffs will cause this, so you're going to have a bigger deficit from that. But what you forget, and what is often forgotten in this analysis, is the revenue generation from the other side. So, this is one of the things that as we start to look forward in terms of, what the economy is going to look like in the next 4 years, next 8 years, next 10 years, et cetera. And this is where you're basing your long-term investment projections on, is that debts and deficits are basically a driver of economic growth. And so if you're going to reduce those deficits dramatically, that's going to impact corporate profitability. And if you're going to increase them dramatically, that's also going to impact corporate profitability. So, from an investment standpoint, we have to keep these things kind of contained within the areas of the markets that they affect the most. And again, right now, as we've talked about earlier this week, corporate profitability is exceptionally high. So there's certainly risk as we move forward to next year. about corporate profitability, earnings growth. Those are the things that drive markets in the short term, particularly over the next 1 to 2 years. It's all about earnings growth, the rate of earnings growth, and those expectations still remain very, very high. Now, and valuations along with that, right? Because we've been bidding up stock prices on the expectation of continued earnings growth and corporate profitability, right? If you take a look at analyst estimates for next year, they're very optimistic. Right now, though, valuations in the market are very detached from underlying interest rates. Normally, when interest rates are rising, valuations should be declining because basically, if you look at discounted cash flow, when you start talking about the fundamentals of stocks, you look at the discounted cash flow. Well, one of the functions of discounted cash flow is interest rates and basically borrowing costs, right? So when interest rates rise, tends to impair valuations. That has not been the case in the last couple of years. In particular, we have a very wide gap. So the question becomes, if you expect interest rates to move a lot higher next year, that's okay, but what does that mean for valuations? And if you're long stocks expecting interest rates to go up, that valuation issue may be a problem next year. That's going to be the big challenge for investors as we move into next year. Speaking of earnings, last night, of course, was the big report. That was Nvidia. So here's what you need to know before the bell this morning. Nvidia came out last night, basically killed it on all fronts. They are running a 55% profit margin on their chips right now, which is pretty incredible. I mean, basically, when they produce a chip, they make 55% profit. That's exceptionally large profit margin for a company like that. $35 trillion in revenue last night, beating estimates. Now, stock's going to trade down a little bit this morning just because estimates were even higher. There were some estimates out there that were just exceptionally unrealistic. They had a blockbuster quarter. Their earnings growth and revenue growth were exceptionally large, about a 95% increase in revenue growth. It was just a boomer quarter for Nvidia, particularly around this new Blackwell chip that has just really kind of hit the markets. But expectations, this is when we talk about expectations were even higher. Wall Street was really wanting them to push a lot bigger number and a lot bigger on their forecasts going out. But again, overall, though, the stock has been doing exceptionally well. It was just trading near all-time highs before this report yesterday. So again, stock's going to trade down a little bit this morning, but technically still within a very good bullish trend. Stock's been a little bit of a sell signal here over the last couple of weeks anyway, so this report kind of fits right in line with that. What is interesting, though, is if you compare Nvidia as an example, also Palo Alto Networks had a very good report. They beat estimates. That stock's also trading down a little bit this morning. But you take a look at a company like Snowflake, which barely beat estimates. The stock's up 21% today. Why the difference? Well, the difference is that Snowflake, as an example, had a very large short position on the stock. And so, again, now those shorts are having to cover on that. So this has really been a market as of late, kind of been a dash for trash, which is that all these stocks with big negative short positions, when they beat estimates, it's causing big moves in stocks. Really kind of in both ways. We saw that with Target yesterday, down 21% after the bell. But flipping this back over, a couple of other things in the markets to keep a watch on. The dollar index continues just to accelerate here. Now, interestingly enough, Bitcoin, which is supposed to be the dollar debasement thing, right? The dollar's going away. We're going to lose reserve currency status. All those narratives. Remember all those narratives about dollar debasement that Mike and I wrote articles about a couple of years ago? Well, the dollar's been rallying strongly here. And guess who's been rallying right along with the dollar? Yeah, that would be Bitcoin, which is now approaching $100,000. So again, Bitcoin is not a dollar debasement asset. It is a risk on asset. And so you're seeing risk on in the dollar, you're seeing risk on in Bitcoin. So just kind of interesting as always the case. Everybody tries to apply a narrative to something, but when it comes right down to it, Bitcoin is simply a dollar asset because in order to use it, you have to convert it back to dollars. And so it's very tied to the dollar. But again, Bitcoin's doing fantastic, but just be careful here, exceptionally overbought. The dollar also, by the way, is pushing really, really overbought conditions. So we're going to see a correction here in both Bitcoin as well as the dollar here shortly. So I'd expect the dollar pullback somewhere around 103 to 104 most likely, come back down to support. That wouldn't be surprising just after this kind of a move. And if you look at Bitcoin, just a pullback to regional support will be somewhere between basically about 75,000 to 83,000-ish on Bitcoin, and that would be a pretty sizable correction. That would not be the first time, but this has been a very ordinary breakout of a long-term consolidation. Bitcoin really went nowhere here for a while, finally broke out. So you just had a good breakout of consolidation, and so this move higher has not been surprising. We've seen these moves before, so again, you'll either wind up with another period of consolidation, kind of like you saw the last time you were this overbought. The previous move took Bitcoin up to about 70,000, and then you went nowhere here for quite a while as the market kind of worked off that condition. You could either expect a pullback to this previous trading range or just another long-term consolidation here. But again, that's going to occur as the dollar weakens here. So again, that's something to kind of look forward to as we move into next year. We'll see how that works out. But that's what you kind of need to know before the bell this morning. When we come back, we'll pick up with Michael Leibowitz, talk about tariffs and what does that mean for the markets and the economy. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Medicare open enrollment is underway. If you need Medicare insurance coverage, RIA Advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. Real quick, it's just interesting right now because I remember growing up sitting around, a black and white television, watching the first man go into space. So there's a trivia question on CNBC right now, and it's a trick question. It says, who was the first person to go into space? Brent, who was the first person to go into space? That Russian guy, Yuri Gagarin. That's right. It's a trick question because most people are going to go Alan Shepard, who was the first guy to go into, the first American astronaut to go into space. But yeah, Yuri Gagarin, the Russian, was actually the first person to go to space. So I'm waiting to see the answer hasn't come up on CNBC yet. So I'm waiting for them to put the answer up to see if CNBC gets it right. So we'll see. Maybe that's why they're spinning CNBC and CNN off anyway from Comcast. So anyway, good morning and Yeah, I got a few things to talk about this morning. Real quick, Mike, yesterday, of course, Nvidia reported earnings. I was just talking about a second ago. Did you pick up anything out of the earnings report that was, different than kind of what you expected?
I mean, they're killing it. They are literally killing it, no matter what the expectation.
By the way, I have to interrupt you. CNBC just said Alan Shepard.
No.
Yeah. So, anyway, go ahead, Mike. I'm sorry, I didn't mean to interrupt. Nothing unexpected. They're killing it. Go ahead.
They're killing it. I mean, their earnings quarter after quarter continue to beat all expectations. They continue to raise guidance. Like you said, their margins are unbelievable. You don't get those kind of margins in almost any business. The issue for the stock, though, is it's priced for this. Yeah. It's up 200% in the last year. So it's kind of, the stock is, you can think of it as getting, keeping up and even getting ahead with earnings. So, if you own Nvidia stock, I wouldn't be disappointed. I mean, this just points to continued growth. My guess is that even though we're slightly red today, we'll end up in the green. It's not going to, I doubt it'll be an up 5-10% kind of day, but it's been doing decently well the last few days. So,
and it's had a really decent rally. I mean, just over the last really kind of since September, it's had a decent rally, and it's flirting with all-time highs. So, you're right. It's going to be down a little bit this morning, but how it ends up today may be a totally different thing. I think potentially the good thing coming out of this report was that maybe analysts will start to pull those estimates down a little bit, because some of them were really unrealistic. There were estimates as high as $42 billion in revenue. That would have been about 150% jump in revenue in a quarter. I mean, they really gotten so far out there in terms of estimates that it was really unachievable by any measure. I mean, you have to almost have 100% margin. We have no cost building these chips. We make 100% profit. Or that's just not reasonable. I mean, they're making 55%. That's like you said, Mike. That's incredible that you can build a product and sell it for 55% more than what you build it for.
Right. But the problem, of course, is with those kind of margins, you're just inviting competition. Yeah. So I think, if you do hold Nvidia, the things to look for going forward, not necessarily today or tomorrow, but going forward are, what are their competitors doing? When are they going to introduce a chip that the market believes is on par with Nvidia at a cheaper price? And once you start getting competition, margins start shrinking, growth rates start shrinking, revenues get distributed across the industry. And that's, the market, while the market's thinking about earnings for next quarter or two, you also have to think about earnings for the next 3 or 4 years. That's just something to be aware of. But at these earnings and growth rates, the stock, which does have high valuations, is not that unfairly valued at a PE of 68. Yeah. If you consider the growth rate, it's got a PE or PEG ratio that's really in line with the market.
Right. Yeah. And this is, I remember writing articles about Nvidia a couple of years ago when it was really just first started taking off, and you were looking at, price to sales ratios that were, near 60. And, the expectation is that sales would eventually catch up with the price, and it did. Right. And that's right. And like you said, you've got a PEG ratio right now of running a 1.9 PEG ratio. I mean, that's very, you're not running a 7, 8, 9, PEG ratio at this point. And it just goes to show you that and this is the unusual. I would say this is more one of the unusual cases with companies. Expectations for growth typically don't keep up like it has with Nvidia. And again, there's a lot of companies we've seen in the past that have been overpriced. And we saw a lot of those companies going into 2022, companies like Snowflake and a lot of others. And a lot of those stocks, Roku, et cetera, they had massively high earnings growth expectations that never matured. And then you saw a lot of those stocks down 70, 80, 90% during 2022. And, that was kind of the devastation to Cathie Wood's ARK fund, was a lot of those companies where the expectations for growth never materialized versus Nvidia, where they actually did. So, and that's kind of an unusual case. I mean, that's not the norm by any stretch of the imagination with Nvidia.
Right. And we actually, the last couple of days, we saw Walmart and Target report. Walmart has a PEG ratio of 5 something. Mm-hmm. So they're growing, but they're growing at the rate of the economy plus a little bit because they're gaining some market share, and there are some other reasons. But if you think about it purely from a PEG ratio, Nvidia is much cheaper than Walmart. Walmart is not really an AI. Walmart cannot grow at double-digit rates anymore. Right. It's not hard to make a case that Nvidia is cheap. As crazy as that sounds, with the $3.5 trillion market cap, and the fact that it's done this in 5 years. Right. It's up 2,500% or something like that in 5 years. I mean, it's truly remarkable how big. And it's not just Nvidia, it's the whole AI industry and what it will become for every other company and for people and for every government.
Well, and I think your earlier point is the most valid, which is that they have a massive dominance on the market right now for GPUs and for chips, et cetera. If you play video games, you have Nvidia graphics drivers. The only other real good competitor right now to that particular area is AMD, and they compete very well there. But when it comes to the GPUs, and particularly those used in AI data centers, it's pretty much Nvidia is the only place to go. But that does invite competition. There's going to be some other company that is probably private right now. It may have already started. We just don't know it yet. And I'm sure there's probably some private equity. And private equity companies, by the way, are throwing money at AI anything. If you have an idea for an AI company, private equity will throw money at you to be in this space. So we're seeing a massive investment by private equity companies into AI and into these startup companies. And I am sure, Mike, that there's probably already 1, 2, 3, 4, 5, companies out there building chips for AI data centers because of where things are going. And we don't know who they are yet, but we'll eventually find out who they are. But there will be companies coming in and invading the space, and that will become problematic, obviously, for Nvidia being able to maintain such large profit margins. Those profit margins are going to come down simply as a function of time and as competition enters the space. That is going to start to erode those profit margins. They're just not going to be able to maintain those indefinitely. But again, that's the thing to keep a watch on.
And you know damn well that AMD and Intel executives are pounding those tables saying we need to do what Nvidia is doing. They're looking at those revenues and profit margins and, quite frankly, their stock options and saying, if we could just do half of what Nvidia does, I'm going to be a billionaire.
Well, I tell you what, I don't think Intel got the message. I don't know what's going on with their execs, but they missed that message. Yeah, AMD
is one to watch because they're probably the closest public company behind Nvidia.
Well, I'm just waiting to see if, my expectation is Intel gets bought by somebody that is going to be and will convert Intel into building, more AI-driven type chips. We'll I don't know when that's going to happen, but I think Intel's on the chopping block here somewhere, and somebody's going to buy them. So we'll see. We'll see. It'll probably be somebody like an Amazon.
and it seems like that rumor, or Apple. I mean, I could see Apple with its hoard of cash, or even Microsoft. And then that does present big problems for Nvidia down the road, because then you have real money and real motivation from a company that knows how to do things, knows how to make money.
Right. No, absolutely right. I thought it was interesting. There was a chart out this morning just talking specifically kind of to our conversation about NVIDIA's returns. Just so ChatGPT went public on November the 30th, 2022. So ChatGPT hasn't been around, it seems like it's been around forever now because time just flies by so quickly. But since November the 30th, Nvidia is up 762%, Meta is up 318%, Netflix up 189%, Amazon up 110, Tesla's up 75, Alphabet's up 74, Microsoft 62, Apple 54. The S&P 500 is only up 45%. So, in other words, since November 30th, 2022, if you had just bought those 7 stocks, you would have absolutely killed being an indexed investor. Just something to think about.
That's why they call them magnificent.
Exactly. All right. Hey, when we come back from the break, tariffs. Lots of debate on the impact of tariffs. Mike and I I've got an article coming out tomorrow that goes further into tariffs. Mike had one on Wednesday talking about tariffs. We've just been bombarded with questions about what does tariffs mean for the economy, interest rates, inflation, all these type of things. We'll get into that next. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel for The Real Investment Show, or just click on the show links at realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Medicare open enrollment is underway. If you need Medicare insurance coverage, RIA Advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. Let me read to you a couple headlines here, just kind of set the table. Mark Cuban says Trump's tariffs proposals will ramp up prices. This was in an article on Business Insider. CNBC, Fed's Cash Carey says Trump tariffs could reheat inflation if they provoke a global trade war. Blanket tariffs would be incredibly inflationary, also from CNBC. Treasury Secretary Janet Yellen warned sweeping untargeted tariffs would reaccelerate inflation, CBS News. Trump tariffs expected to spike inflation and interest rates, according to Business Insider. So this has been, and Mike and I have just been bombarded by emails and questions and you name it from people panicking over tariffs because of these headlines. And as I said, I have an article coming out on this tomorrow. Mine's a little bit of a different take on tariffs, going back to 1915 than Mike's is. But Mike has an article out yesterday on this as well. So again, as is always the case, when we get a lot of these questions, we write articles and research about it so that you have some information to work off of to make sure you stay focused on kind of what to expect from policies as we go forward. And one of the trade-offs also is, again, as I was talking about earlier, is that a lot of the headlines now is like Trump's proposals are going to drastically increase the deficit. It's not really the case because you have to look at the offsets. right? Does other economic policies increase revenue while other policies increase the deficit, right? So do they offset each other? And this is always the problem. You see a lot of these analysis. They look at one aspect and they look at what that impact would be, but they don't look at the offsets from that. And that's really the key to tariffs: is what are the offsets when you impose tariffs? So, Mike, I'm not going to get in. I'll kind of get into my take on this on Monday, but let's just work off your take that you did yesterday on the website, realinvestmentadvice.com. By the way, if you haven't been by our website, realinvestmentadvice.com, we have a whole new website up. So it's a little bit easier to navigate, a little bit easier to find stuff. All our articles are in one place now under the resources tab. So go check it out. We'd appreciate it. Realinvestmentadvice.com. So, Mike, tariffs. Just start where you want. I don't know where you want to start, but just start wherever you want.
I got a frog in my throat today, so I apologize. I think the most important part when you think about tariffs is you have to think about all of the impacts, not just the initial impact. So if a tariff is put on oranges, we'll just use oranges in our example. If it's put on oranges, price of oranges are going to go up. That's going to happen. And yes, there'll be inflation in oranges. But whenever economists, Lance and I talk about inflation, the market talks about inflation, we're talking about inflation in the aggregate. So not just the price of oranges, but apples and cars and computers and houses and everything else. So, it's very short-sighted to think that, well, the prices of oranges are going up, then we're going to have more inflation. First of all, let's think about this from the consumer, the people that eat oranges. They really have three options. If all of a sudden Trump puts a tariff on oranges and, as an example, we import 100% of oranges, as an example, and they're taxed. Well, what are you going to do if that happens? Well, for starters, you could say, you know what, screw it. I don't like oranges. I'm going to eat apples from now on. So yes, the price of oranges have gone up, but no one's buying them. And in that case, the basket of goods that we use to compute inflation removes oranges, reduces the weight of oranges, increases the weight of apples, and the effect is very negligible. Other people are going to say, you know what, I'm just not going to eat oranges anymore. That's it. I'm going to save my money. So again, the weighting of oranges falls out and those sales into the economy just go away. And then there's a third people that say, I love oranges, got to eat them. But now I have less money. I have to cut back on cars, on computers, on something else. So the demand for something else will go down and those prices will decline. So there's a fixed amount of money in the system. And really what the tariff does is it changes the size of the slices of the pies. But it's not truly affecting the total inflation. Now, if more money enters the system, yes, it can have some effect. But, that's just from the consumer point of view. We also have to think about the person, the grocer, the guy selling the oranges, right? What's he going to do? If all of a sudden the prices of oranges goes up a lot, he's going to say, look, I'm going to lose sales. I have to do something here. And my profit margin is the same before tariffs as after tariffs because that extra price is purely going to pay the tariff. So I'm gonna eat some of that tariff. I'm gonna cover some of it so that the price of oranges isn't too expensive and people will still buy them. Well, in that case, he's reducing his profit margin on oranges and he's going to have to cut back somewhere else, right? Maybe he lays off a few employees. Maybe they decide not to open a new store or buy new equipment for the store. So, there's kind of the seen, we talk about the seen and the unseen. And this is Frederick Bastiat, a French economist that, wrote this 100 years ago. The seen is easy. What's not so easy to see is the unseen, the other effects of what happens. Then we have to think about retaliatory tariffs. None of these countries are going to say, oh, that's great. Tariff us, please tariff us. And we're not going to do anything. They're going to retaliate. Mm-hmm. Of course they are. And that just means that our exports to those countries demand will fall, which means that countries that export those goods will have to lay off employees, cut expansion, reduce expenses, whatever they're going to do to try to make up for that lost revenue.
Right, which is deflationary.
We can go back in history. There's in the 1930, Herbert Hoover put on tariffs to try to protect American workers, American farmers. That was a disaster. It cut global trade in half, and we had massive, I'm not going to say it sparked the Depression, but it certainly made the Depression a lot worse. We had incredibly negative deflation from 1930 to 1932, which was fed in part by the tariff, 25% unemployment. That was almost 100 years ago. Actually, almost 100 years ago. We can go back to 2018. Trump introduced tariffs. We know what happened then. Import prices to the U.S. fell. The economic growth did not spike. Inflation did not spike. Because what happens in addition to everything I said is that the dollar rose against the Chinese yuan. So that helped offset some of the tariff costs, but consider all the goods that aren't tariffed, that the higher dollar made those goods cheaper. So if they tariffed about 10% of Chinese goods. The other 90% of Chinese goods coming into this country became cheaper because the dollar was stronger.
And one other fact we're seeing right now, Mike, is already we've seen headlines. And again, so using your orange example, I think is great. But instead of saying all oranges, just in this particular case, because Trump's only talking about tariffing certain countries like China, and so let's say we import a lot of oranges from China as part of our global trade. Well, already we're seeing manufacturing companies going, well, I'm just not going to buy oranges. I won't produce any oranges or bring in any products from, orange products in from China. I'm going to move my production over to Vietnam where there's not a tariff. And this is one of the other kind of fallacies of tariffs is that this is going to cause everybody to start remanufacturing back here in the U.S. The problem is labor costs here are too high. So we're already starting to see manufacturers go, well, I can't manufacture in China and bring that in with a tariff, so I'm going to move my manufacturing plant to Mexico or to Brazil or somewhere else where labor is cheaper and there's no tariff.
Right. And the thing, broadly speaking, what makes why is America far and away the richest country? It's not even close how wealthier we are than every other country. In the article, I note that Mississippi, which is the United States' poorest state, has a higher GDP per capita than France. I mean, that's pretty incredible that the poorest of 50 states is essentially wealthier than France. Why is that? It's capitalism. And one of the big tenets of capitalism is free markets. Free markets create the most efficiency, most productivity, and ultimately the most wealth for all the nation's people, not just the richest, but the poorest as well. So any kind of tax, whether it's domestic tax, international tax, any kind of government interference into markets makes them less free, makes them less productive, takes away prosperity. So, just think about it from a broader level. I know it's us levying the tax on another country, but any government interference into free markets is a problem. It's a drag on growth. And I'm not saying there are needs, right? There are reasons to put tariffs on, and they do serve a purpose, but net, the effect tends to be reduced economic growth and lower inflation. And, we're not getting into the political side of whether or not we should tariff. Then there are, there are reasons to do it, and I get it. But as investors, we just have to think about what's the end effect. And history has proven time and again that it's lower prices and less economic growth.
Yeah, and again, I think that's a really kind of key point to all of this. The reason that we're writing these articles is because, again, we're getting a lot of questions from clients, from prospects, from listeners. going, oh my gosh, I read this story, there was this guy on YouTube somewhere, and he said this is going to crash the economy and inflation is going to go through the roof because of these tariffs. And just, you've got to look at the data and say, what's going to be the impact of this and how does this actually impact markets, inflation, those type of things. And the evidence doesn't support the inflation narrative. The evidence actually supports a deflationary narrative with slower economic growth that will weigh on stock prices, by the way. And again, both Mike and I have been laying out for you for the last several months is that these 20% return years that we saw last year and this year, those are not normal within the overall market trends. So, next year, I would expect slower economic growth, less inflation, and particularly if you're talking about instituting tariffs, a much lower rate of growth in the S&P. So if you could be talking about a year where the market is flat to slightly positive in that type of an environment. So, we don't know what that's going to look like when we get to next year. There's a lot of variables, can't predict that far into the future. But I think that what is fairly evident is that if Trump does institute tariffs, it's not going to be this inflationary boondoggle that a lot of the media is running around making headlines with. So just be careful with your portfolio. Don't make assumptions and make drastic changes to your portfolio about something that's probably not going to be the case. All right, quick break. We'll come back. Get ready to wrap up the show. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Medicare open enrollment is underway. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
My son, Thomas, who really good-looking kid. And so he's starting a business for Thanksgiving to provide Thanksgiving packages.
The Real Investment Show podcast.
For $75, he'll show up at Thanksgiving, with a girl and tell a cute story of how they met. They'll stay through dinner and then, give the parents a hug on the way out.
Same show, your schedule.
Quite a business idea. I wonder if there's a package in there where he wears the matching ugly Christmas sweater.
At realinvestmentadvice.com.
No, that's the Christmas package. That's
deal.
coming up.
Okay,
so yeah.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So, real quick, just want to talk about stupid investor investments. So, just for the break, I was scrolling through the YouTube chat, and one of our commenters was talking about MicroStrategy, which is a leverage bet on Bitcoin. And so I just, we were talking about Nvidia, we were talking about price to sales and fundamentals. And again, MicroStrategy is a company, right? They produce software. That's a company. Now they have gone into a tremendous amount of debt to buy Bitcoin. And so now MicroStrategy has become basically a leveraged proxy of Bitcoin. So when Bitcoin goes up, in fact, if you overlay a chart, they look very identical to each other. So MicroStrategy is up 10% this morning because Bitcoin's rallying, and there's nothing wrong with this, right? As long as nobody looks underneath the hood of MicroStrategy. That's the trick. Again, because they're taking on a tremendous amount of debt in order to buy Bitcoin. And so as long as Bitcoin goes up, they're good. If Bitcoin ever crashes, the MicroStrategy is done, like on multiple cases. So like they'll be out of business ultimately because they have no earnings growth. Their price, their PEG ratio is negative. They have no earnings growth. This company has a net income of negative $400 million. So there is no earnings growth for this company. It is solely this is basically looking at Bitcoin and putting 3 times leverage on it. It's trading at 6 times standard deviations above its long-term monthly moving average. I've never seen a company trade that far above their long-term monthly moving average. Its price to sales ratio is 226 times price to sales. Price to book is 28, and price to cash is 2,196 times price to cash. So, this is a company that if something goes wrong with Bitcoin and you're long MicroStrategy, it will go down much further and faster than Bitcoin does, and this company will be bankrupt. It will be out of business. It's just a function of time. So this is one of those companies, like we saw in 2022 as a good example, that when things go wrong, and it eventually will, it's a guarantee that this will eventually work out very badly for investors chasing MicroStrategy, that you will lose a tremendous amount of money very quickly. This is one of those stocks you'll wake up one morning and be down 50% in it like that, and you won't have time to get out of it.
And MicroStrategy is using debt. This is all leveraged.
Right. That's why it's a leverage bet. It's basically a big margin call on Bitcoin.
Now, Lance, are you a little surprised the SEC hasn't really said anything about it? Because effectively, it's a leveraged ETF, a leveraged mutual fund holding company.
Yeah, and they're so far outside their business mandate, right? So when you start a company, right, you have to specify what your business is, right? And their business is basically software. They're so far outside of their realm of what their business does, and there is such a large amount of risk relative to that business in terms of taking on the debt to buy Bitcoin, et cetera. I am surprised that just from an SEC inquiry hasn't been made into the stability of the company for the underlying shareholders.
Yeah. They're actually out here in Northern Virginia. Maybe one of these days I'll take a drive out there, and there'll probably be one car in the parking lot. It's the guy that buys the Bitcoin.
Exactly. That's his whole
job. Because their other business has done nothing for 20 years now.
Yeah. And again, look, if you're long, all I'm saying is if you're long MicroStrategy, congratulations, you're making a killing, right? I mean, there's nothing wrong with it. Just be aware. All I'm saying is I'm not poo-pooing MicroStrategy. Mike and I aren't saying you need to go sell it today. We're not saying that at all. All we're saying is this is a highly leveraged bet on Bitcoin, and when this thing reverses, and it will, you cannot sustain the deviations from long-term moving averages that currently exist. I'll just give you a good example. The last time it did this was back in 2021, and the stock was trading at nearly $100 a share at that time. The stock had gone from basically $10 to $100 over the course of basically about 4 months because Bitcoin spiked. By the end of 2022, it had given up 100% of those gains. It was back to $10 a share. So again, you can expect that currently at $524 a share, you're going to lose a tremendous amount of money when that reversion ultimately comes. And so this is why we talk about risk management, we talk about portfolio management all the time here. This is one of those cases where take some, if you put $10,000 into MicroStrategy and you're up, take your $10,000 out at least, right? Go put that in the bank. So at least you don't lose all your principal. I wrote an article on our website, if you go search it up, about the kid that invested in Tesla and made $400 million and lost it all, 100% of it. Happens a lot. So just manage your risk, take some money off the table along the way, put a little bit in the bank. You're making great money, right? Just don't be greedy. That's the whole point of the conversation.
And this is a good, we started with Nvidia. Nvidia stock is going up for all the right reasons. They are selling product. Their growth of revenue is surging. So the stock price is following earnings. We can argue all day that stock price has gone up too far or not enough. And I'm not going to tell you a 30-40% correction in Nvidia stock can't happen. It certainly can. Nvidia is not going out of business in 2 years. They are going to be a top 10 company. They will continue to grow until, and we're talking 5, 10, 15 years from now, that market share is slowly taken away. But even then, they will be a predominant player in chip chip designing. MicroStrategy is a one-trick pony based on leverage on Bitcoin. So when Bitcoin falls, and I'm not saying Bitcoin's going to 10,000, but if Bitcoin falls to 50,000, 60,000, the way that they have their debt structured and using their Bitcoin as collateral for the debt is potentially a huge problem. And it could wipe the company out, not just give back the gains of the last 2 years, but actually wipe the company out. So there's a massive difference between Nvidia and MicroStrategy, whose stocks look very similar. It's really what's in the engine of both of them. And Nvidia has an engine. MicroStrategy is built up on speculation.
Yeah. It is very similar back to the dot-com crisis, right? We saw companies like this doing similar stuff back in the dot-com crisis, which was, they had a business plan, they threw up a website and said, hey, we're a new dot-com company, and they had no underlying fundamentals. And it's fascinating to me that the same people buying MicroStrategy are the same ones that think the market's going to crash because it's overvalued. So... I'm buying MicroStrategy because of Bitcoin, because the market's going to crash and that means Bitcoin's going to do great. No, those are highly correlated assets, and that you are not going to be protected if the market crashes. This is going to be the thing to pay attention to. When the selling comes, it's going to hit everybody across the board. So anyway.
And if you really like Bitcoin, buy Bitcoin.
Yeah, just buy.
But
buy
you're
Bitcoin. Not making as much money
ETFs.
on Bitcoin. I own Bitcoin. It's not going up nearly as much as MicroStrategy, Mike. I need to buy call options on MicroStrategy. Then basically we're done, right? That's all we need to do.
And I guarantee you that the volume on those call options is probably crazy, and the implied volatility is probably a number we can't comprehend.
Right.
It's probably triple digit, right? The market's probably expecting more than 100% change in the price over the next year.
Yeah. It's going to be interesting. This will be a story. We'll come back to this in the future and look at it again. And either Mike, you and I are going to be terribly wrong, and this thing's going to be at $1,000 a share, or we'll be right and it'll be at $100 a share. But it'll be an interesting conversation to go. Do you remember when we were talking about this on the show?
So what is it, November 24? November 26 we'll come back.
There you go.
And I'm going to make the under at $50.
All right, there you go. All right, Mike, you're on record. All right, that wraps up the show for the day. Thank y'all for joining me. Get by the website, realinvestmentadvice.com. Mike's article on tariffs is out. I'll have one out tomorrow, a little bit of a different take, just looking a little bit more at history and market dynamics. But that'll be out tomorrow on the website, realinvestmentadvice.com. Also, if you have any questions or comments, just hit one of our forums on the website now. Ask questions, comments, whatever you need help with. We're more than happy to help you. All at the website, realinvestmentadvice.com. Be sure and like and subscribe to the channel. Hit that like button. We certainly do appreciate it. It does help us out a lot and helps us make sure that we're kind of growing our channel, which is what we want to do. So anyway, y'all have a great day. We'll see y'all back here tomorrow for Financial Fitness Friday. Danny and Richard here, supposedly. We'll see who shows up. You never know. You never know with those two. But somebody will be here in the morning for Financial Fitness Friday. I'll be back on Monday. Holiday shortened week next week. We're going to have shows Monday, Tuesday, Wednesday. Thursday and Friday we'll be off. So have a great day. We'll see you next week.